Good evening and welcome to Mortgage Coffee Talk. My name is Tahir Qureshi. I'm a principal broker of Canada Express Mortgage. Tonight we're going to talk about impact of mortgage payment. How the mortgage payment go up and down, what impacts the mortgage payments without changing the terms and conditions of the mortgage. First of all, when you obtain a mortgage and with the mortgage you secure a mortgage insurance. Mostly insurance are year-to-year basis. So if your insurance is coming for renewal, it might cost you more money because of any increase in mortgage insurance, because you acquired the mortgage insurance to protect your family and your home. Because if you lose the job and you cannot pay mortgage, according to your mortgage term, depending on the condition, you may be able to the bank will pay the mortgage for 1 year period of time until you get your reemployment. Or there is an injury, you can work and you're protected. So this has nothing to do with the actual mortgage, but most of the bank will be collecting the mortgage and insurance mortgage together. It will affect you. So this is very, very important to check that frequently to make sure there is no increase of payment because of insurance changes. Second thing is property taxes. Anytime property taxes are reassessed, it will have an impact on it. There are two types of property taxes. We're going to talk first about the municipal taxes, because under the Municipal Act, the city is required to collect total expenses from the residents, so they don't need to borrow money to operate its operation. That means the total expenses for the operation, except the infrastructure, they will be collecting from the resident of a city. Therefore, I noticed that my bill came in, it was 3.42% higher than what was in 2019 to 2020. That's a regular increase because city incur cost. They pay extra bonuses or employment, maintenance, more costs on transportation, your park and recreation facility. So it increases the cost of the operation for the city. Therefore, you have to pay for that. So total cost of the budget is divided into a factor that is applied to your property based on your assessed value. We're going to talk about the assessed value in subsequent. So that means if your bank is collecting your taxes, they will automatically charge you more money, and don't be surprised, because you need to pay attention to the bills, the increased cost. It's very, very important. Third one is that if you have a rate adjustment, if you are having a variable mortgage, and if interest goes up, your payment will go up. This is very, very important for you to check and monitor the mortgage. A lot of people are enjoying the low mortgage to make sure that if things start changing down the line, you are able to get it fixed, because having this Variable mortgage gives you advantage as long as the rates are low. But if bank make announcement to increase that rate, your mortgage payment will go up. And if you have not allocated funds or you're not prepared to handle those variation, you will be in trouble. So this is very, very important for you to check. Number four is refinancing. When you do the mortgage refinancing, it's very, very important for you to check the rate, because what you have secured a mortgage based on the condition that you had when you bought the house, you're refinancing it, it has to be appraised again, and the new rate will apply. Right now, depending on the condition and relationship you have, there are good rates available to us. And as I mentioned in my previous broadcast, broker like me, I'm a principal broker of Canada Express Mortgage Inc. We are in a position to give back our fee. We can buy down the rate to accommodate and meet the needs of our client. As you know, I'm also a real estate broker of record for City Pro Realty Brokerage. So when we have a customer who buys property for us, we make sure that we buy down the lowest possible market rate available to our client, and therefore they get benefit of it. We just did 2 transactions and we were able to get them a very good rate. And if you're looking for a good rate, you can also call us 905-785-9926, Canada Express Mortgage. Now, the other effect that will have is a mortgage insurance, home insurance. Mortgage insurance, home insurance, property taxes, and mortgage payment, they're all related to the property. Either you are paying yourself or you are paying through your lender, because they collect monthly to make sure it doesn't burden you. For example, City of Mississauga sends you bill for first 3 months to cover this last first half of the year. Then they send you the final bill, which includes any increases for the next 6 months. And because of coronavirus, our City of Mississauga Council have allowed us to make late payment. This is very good. It helps us to pay the bills. And normally we pay the second quarter in June, July, August up to December. Now we're going October, November, December. So they know that we have challenges. People don't have the money to pay. So this is very, very critical that our city council has thought about the ability of our residents to pay the bill. But it does not waive the payment, because they need this payment to pay out the services that we're enjoying today because of pandemic. So this is also now, when we talk about increase, if you have a variable mortgage, if the rate goes up, you will pay more money. If the municipal taxes goes up based on operational costs, not infrastructure. Mostly infrastructure projects are financed, and federal government sometimes help us, or they borrow money. At the end of the day, it is residents who have to pay for it. So if there is any change of property taxes, and you are paying this through your lender, that means your payment will go up. If you are on a variable mortgage, you will pay more money if the interest go up. If you have a home mortgage, and I tell you, last year, my mortgage for home insurance went up almost $90 a month. So there is nobody controlling these insurance company. $90 per month, my mortgage insurance has increased. the more home insurance have increased. So that means if you are getting a notice from your home insurance to pay more money, depending on location, depending on the insurance company, you have to prepare yourself to make sure you are able to pay more payment. And they are part and parcel with the mortgage payments related to the house. Because if you don't pay home insurance, bank will never give you a mortgage because they want to protect their investment. They give you the money. If you don't have a mortgage insurance through the bank and you run the risk of losing a job, then you will end up selling the house. If you don't have a contingency funds, you're supposed to have contingency funds. So these are consequences that you will face. So make sure that you have done your homework and prepare a budget to cover those contingencies. And now we talk about how can we help to pay down the mortgage. When you have a mortgage, it allows you to make double payment. So for example, if your mortgage is $2,000 a month, so about 35–40% of that 2,000 is going towards principal and 60% approximately goes toward your interest payment. Now, if you make a second $2,000 payment, it will reduce your principal by $22,000. It also brings you down amortization period. If you continue to do that on a monthly basis, bi-weekly basis, or weekly basis, it depends how you have set up your mortgage payment. And regardless of a period that you fixed for mortgage on a monthly payment, you have the ability, you need to talk to your lender or mortgage broker to adjust the rate based on bi-weekly payment, weekly payment, and you will see if you go bi-weekly, you're gonna end up paying 1 month more payment. If you go monthly, you pay 12. If you go bi-weekly, you end up paying 26 payment, which is 13 months. So that means you have paid 1 extra month on top of your contribution toward principal. This is very, very important to note that. And on top of that, if you get bonuses or other payment or extra, you got some dividend from that you want to pay, you can pay that down in lump sum amount. Mostly bank will allow you 10 to 15% one-time payment during every year. So you can accumulate the money and pay one lump sum payment. Imagine that if you are paying double payment every month, that's a 12 payment, that means $24,000 going directly to your principal. And then you have approximately 35–40% going from your 2,000. That's another $800 times 12. That is also reducing your principal and your amortization period will shrink. This is very important that you do that if you can. We also, because of our economy, because of temptation, shopping sprees and all that, we accumulate debts on mortgages, debt on business cards, line of credit. So and their interest rate is very high. So my recommendation would be to pay off your Visas and MasterCards because your mortgage interest rate right now is really, really low. And if you're looking, we have done a tremendous job for our clients. If you're looking for a mortgage or refinancing, you can talk to us. We will only let you do it if you think you will benefit from this rate that we're going on. So it's very important to pay down your mortgage. But before you do that, you pay down the highest mortgage. So the bank cards or other Home Depot or Best Buy, because their interest rates could be 25, 30%. So it's important thing is, where you are paying the more money, you should reduce that and then start saving money. And that saving is the best saving is to keep contingency funds and pay toward the mortgage, and have a line of home equity line of credit that give you flexibility in case if you lose a job and you need a little bit of time to get a job, or you plan to relocate, downsize, you have a room. It's very, very important to understand these things impacts you. And coronavirus has impacted many, many people. And I tell you, when the government support ends, people will be going to unemployment. There will be challenges. Right now, everybody's being supported. They have the money and the financial situation is improving because Peel region, Toronto has gone to stage 3. So we are opening up the offices and operations to create opportunities for more to do business openly with keeping social distance. But definitely it has impact. How many of us have lost a job, lost the income? We have learned different skills, different approaches to handle our financial matters. So this is the most important thing you have is a shelter for your family. You have no choice. Either you're renting it or you're buying it, or you bought it, you're maintaining it. So you either way, rent has gone skyrocketed. It more justifies to buy the property. It's always been the case because you also build equity. But when you're renting it, you're paying somebody else property. So it's important to pay attention to the details. And how also impact is the mortgage payment? First of all, is the interest rate. That's number one. If there is a fluctuation of interest rate, and if you have variable mortgage, or if you are doing the refinancing, interest rate plays a very significant role. The most important factor is amortization. Amortization is a period in which you decide to pay that loan. If you shorten the amortization period, your payment will be high. Conventionally, we go to 25 years amortization, which is 60 months, and the term of the agreement is 5 years. Amortization is based on 25 years. Now we are doing also 30 years amortization to a little bit easen up the pressure. It may increase a little bit more payment, but you are able to afford it. So this is very important to you to understand. Amortization period will impact your payment amount that you pay on a monthly, weekly, or bi-weekly, or accelerated bi-weekly, or this. It's called frequency of payment. So if you are concerned about additional payment, increase of property taxes, affordability become issue, you lost a job or your spouse lost a job and you have a shortage of income, you really, really seriously need to talk to the lender and the mortgage broker. I'll be more than happy to assist you. Call me, I can guide you. to make sure that you are taking precautions, taking the right approach. Since I am also a real estate broker of record, I'm a fellow of Real Estate Institute of Canada. I'm a certified international property specialist, certified real estate specialist, senior real estate specialist, seller representative specialist, ABR, and a broker record for City Pro Realty and Brokerage. I can give you both. We provide two-in-one solution. We can do real estate and we can also look after your mortgage. So make sure all in line with your objectives and goals, so you have a safe and happy environment to live and enjoy your home without fear. Because planning is very important. Strategic thinking is very important. It's very important for you to talk and discuss. We are mandated by law. Real estate as well as mortgage is regulated in the Privacy Ontario. We follow the PIPEDA privacy laws. We protect your private information. So you can openly discuss with us in a private setting and we can guide you. There is no fee for the guiding. You are free to call me anytime. If you have a mortgage question, you can call me 905-785-9926. If you have a real estate question, you can call our brokerage 905-785-9923. We're more than happy to assist you. So this is also very, very important for you, that if you are able to pay more money and it's a good time, you have good income, so you can increase the mortgage payment. The reason I say to you, you don't need to necessarily go to 30 years. You can go to 25. You can go to even 20 years. Banks are willing to cooperate with you to adjust that period because they want you to be successful. This is the goal of the bank, is to help you pay down your mortgage and be mortgage free. But be concerned about things that impact your mortgage payment. Well, it's not strictly the mortgage payment itself. As I mentioned to you, it could be a mortgage insurance. It could be a home insurance. It could be property taxes. Now I'm going to come to you about property assessment. That's another factor. Municipal Property Assessment Corporation, called MPAC, does assessment of all properties every 4 years. And I think this was the last years that we have enjoyed prorated assessment increase in the property and we pay taxes. So I'm expecting sometime next year, we will have a new property assessment and everybody will get a notice. And they will set up the price for 2021, 22, 23, and 24. And you will be gradually paying the property taxes and you will know what increase would that be. Because market has increased. Value of the property has increased. So Government of Ontario want more property taxes from you. And they need more money because, as you know, we're in Peel region. We pay region prices, we pay city, and we pay Ontario government. So these property taxes is what the revenue city has to run the operation. Municipality get also some GST, HST rebate and some other assistance from the government. But to run the operation, we are responsible to pay property taxes. If cost of doing business is increasing and new assessment is done by MPAC, we will be paying it. How much would that be? God knows. When you are happy, your property gone value has gone up, and you feel that you got a lot of capital gain because you did a wise decision to buy the property and pay low mortgage rate. But that also create opportunity for MPAC to charge you more by assessing your value of the property. If you disagree with their assessment, then you can challenge them. They give you 30 days period. Whatever notice that you come, it will be a notice that if you challenge them, they will go through the process. My personal assessment is that they pretty much come below market value. So they're very reasonable. They have thousands of employees, qualified people that do assessment. And yes, mistake can be made. I have observed mistakes in the past and corrected and got them corrected for my clients. But you have to go and submit a claim disagreeing the assessment. But you will learn that once you get the notice, their prices are way below the market value, sometimes 50, 20% below the market value. They want to be fair. And do you know there is a factor, the city, once your assessment value comes in, you can go to city, you can see your assessed value of property taxes. So you get a factor, a tax rates factor. In the first 6 months, the city normally uses the previous year's rate, and then in the subsequent 6 months, they will charge you the final rate, and they will do adjustment. I was looking at my taxes, so there was $361.39 more this year than from last year. So that means it's going up. And if you are a property owner, you're having a mortgage. I'm not talking about utilities, landscaping, other expenses that you have to do to pay for your car, pay for your insurance. And this is a part and parcel with knowing your client. Under Mortgage Broker and Lender Act, we will always know our client, and we also know our product. That means we need to know what is the suitable product for our client. So we do a lot of due diligence, which you may not see when you go to the bank. We're regulated. So we always have to make sure that you can afford the mortgage that you are trying to get. Sometimes when you are trying to refinance because there's a temptation from people because of mortgage rate, you have to be very wary about it. You have to check it out to make sure the remaining period that you have, you may have a penalty clause. If you have a fixed mortgage, you may have a penalty to break a mortgage because new rules of qualification will apply to you. So you have to see if you have a remaining mortgage, how much is the penalty from the bank or the lender, find out. Then you see if you are getting a new financing and how much saving you realize in the next 5 years, and minus them two together and see if it's worth getting the refinancing. Unless your circumstances are such that you need to take down, you need to borrow money to do some family work, paying higher education for your children. You know, with the children who are going to universities and specialized field, we always have challenges that we need money to support our children. So circumstances will be different. And this is the best time that you talk to your broker, because you will have privacy of your home. You can talk personally through Zoom, and you can ask any question. You will be satisfied. You will be surprised how much mortgage brokerage or mortgage agent know about financing, that you may not be able to get that information when you visit a lender or a bank. because they are not required, we are required by law to have education licenses. So this is a little bit assessment that I share with you, what impacts your mortgage. So if you have any question, I'm going to repeat again. Mortgage is impacted by property taxes that you pay to the city. You have a mortgage insurance that your bank takes the money from you. The property taxes they take from you. If there is a reassessment of property taxes, your taxes will definitely increase. You have a mortgage insurance, home insurance. You have to have mortgage insurance, otherwise you won't get a mortgage. You cannot even close the deal. It impacts you. And if you do a variable mortgage, if the interest goes up, it increases your mortgage. To keep the mortgage down, make sure you make double payment if possible, bi-weekly, monthly. If you cannot do that, you at least have some saving on a principal on an annual basis to bring down the principal. And it will shorten your amortization period. And this is very, very important to understand that if you're doing a refinancing, think about it. If you're doing a variable mortgage, to make sure that you are capable of handling fluctuation. If you are on a fixed income, that means your wife and yourself both are on a fixed income, so it's highly recommended that you keep fixed mortgage, so no effect, economic impact will affect you. Be aware of that. If you end up selling a property when you have a fixed income, fixed mortgage, then you will have to pay penalty. Variable, if you cancel a mortgage, you pay 3 months interest payments. But there is a different mechanism when you have a fixed price mortgage and your mortgage rate has been subsidized. So there is a different calculation and is a little bit significantly higher than variable mortgage. Mostly variable mortgage are also fixed. Recently, I haven't seen many open-ended mortgages, mostly fixed variable mortgage. So I hope that tonight's episode about impact of mortgage payment, you have been informed. If you have any questions about mortgage, today's episode, or any issue regarding mortgage, you can visit our website, Canada Express Mortgage.inc. Our website, is express-mortgage.ca, or you can call me directly, 905-785-9926. I'd be more than happy to assist you. Again, I take this opportunity to thank all my viewers and supporters who've been watching and encouraging me to continue this program. I thank you on behalf of my team and Mortgage Coffee Talk. We thank all our health professionals, police officers, nurses, doctors, emergency staff who put their life online to protect us and serve fellow citizens. We're very happy that our region has entered on stage 3, but caution is advised. Keep social distance. If you cannot do that, wear a mask, have a sanitizer in your car, carry gloves, and use safe practices. Social distance has helped us to reduce the spread of coronavirus, and that's why our economy is going to begin to mobilize and our effort to bring economy back to as usual. So real estate is very hot right now. So make sure that you are maintaining your property, and if you're selling it or you have any questions regarding real estate or mortgage, give us a call. I wish you all the best. May God bless you all. May God bless Canada. Thank you for watching Community Coffee Talk, Mortgage Coffee Talk. We have a Mortgage Coffee Talk on Wednesday. We have a Community Coffee Talk on Wednesday at 7 p.m. and we have Realty Coffee Talk on Thursday at 7 p.m. Thank you for watching. God bless Canada.